I had to start over at 44. Divorced, no outside retirement, and basically rebuild my financial future from scratch. So, I'm a full-time teacher, and when I bought my short-term rental, I didn't just do it for the Airbnb income. I did it because I learned that this strategy could save me thousands in taxes, which I could reinvest into more properties or use to fund my life. Learning this loophole changed the game for me. I realized I could make extra income, lower my tax burden, and build long-term wealth, all while still being in the classroom. Welcome to Chalkboards to Cash Flow, Episode 20, The Real Reason Teachers Should Start Short-Term Rentals, the STR Loophole. How owning a short-term rental can massively reduce your tax bill, even with a full-time W-2 job. What if I told you that buying a short-term rental could not only bring you extra income, but can also save you thousands on taxes, even as a full-time teacher? It's called the short-term rental loophole, and it's one of the most powerful wealth-building tools that few W-2 earners know about. In this episode, I'm going to break it down in simple terms and show you how I'm personally using it to build wealth as a public school educator. What is the STR loophole? Let's start with what it actually is. Normally, W-2 earners like us, teachers, nurses, office workers, don't get to deduct passive real estate losses from our active income, also known as our paychecks. But short-term rentals can be treated differently. If a short-term rental has an average guest stay of under 7 days and you materially participate, we'll define that, and you meet IRS criteria, then you may be able to treat that income and those losses as non-passive. And that means you could deduct things like depreciation, repairs, furnishings, and more against your W-2 income. This is a legal tax strategy. It's not sketchy. CPAs know it. Wealthy people use it all the time. Now you can too. I do want to say that I am not a CPA, and you should always seek the advice of your CPA or tax professionals before you do anything. So, I'm a full-time teacher, and when I bought my short-term rental, I didn't just do it for the Airbnb income. I did it because I learned that this strategy could save me thousands in taxes, which I could reinvest into more properties or use to fund my life. If you're listening to this podcast, you've probably heard me share that I had to start over at 44, divorced, no outside retirement, and basically rebuild my financial future from scratch. Learning this loophole changed the game for me. I realized I could make extra income, lower my tax burden, and build long-term wealth, all while still being in the classroom. The key requirements. Let's break down what you need to actually qualify for the STR loophole. 1, you need short average guest stay. Your rental's average guest stay needs to be under 7 days. Airbnb usually handles this naturally, so you cannot do midterm rentals or terms over 30 days. 2, you need material participation. You need to meet one of these 3 IRS tests. 1, you do 100+ hours on the property and no one else does more than you. We covered this during our initial property setup. Flew into the house and did a ton of work getting the property set up, making sure it had all of the proper dishes and decor and it was cleaned properly. So we did a ton of work to get that 100 hours. Another thing you could do is 500 hours of work on the property. We didn't do that many, but you must do substantially all of the work on the property. Examples of activities that count: messaging guests, cleaning, repairs or restocking, managing the calendar, marketing. If you use a property manager, it's harder to qualify, but if you are the main manager, you likely meet that threshold. Number three, keep records. Track your hours on a spreadsheet or notebook, receipts, expenses, and save them for tax time. What the STR loophole doesn't do. A few quick clarifications. This doesn't get you out of paying taxes. It reduces taxable income. It won't help you if you don't materially participate. You still need to talk to a tax professional, ideally a real estate savvy CPA. This is a strategy, not a shortcut, and when done right, it's a powerful one. Why it's a game changer. For teachers and W 2 earners, this loophole makes STR more than just fun side hustles. It gives you a tax strategy, something usually reserved for the wealthy. It helps you grow real wealth faster. This is about more than income, it's about ownership, agency, and planning for a future beyond the classroom. If this episode opened your eyes, send me a message on Instagram at Chalkboards to Cashflow. Also, join our Facebook group, Chalkboards to Cashflow, where we talk about this stuff every day. You can be a teacher and build wealth at the same time, and I'm here to walk it with you. Bye.